Ever since the interest rates started coming down on mortgages, especially with how substantially they came down in a relatively short period of time, I keep seeing a bunch of news stories saying like, hey, mortgage rates are down, you should go out and buy a house, or should you buy now that rates are down, guys? So I want to go over this and jump into this into more detail. I covered this a little bit in a recent video, but I kind of want to make it like the headliner of this one and go into more detail on it. In October, if you wanted to get a 30-year mortgage rate, you were looking at close to 8%, if not much higher than 8%, if you didn't have the best financials in terms of credit and income and all of that. And since then, the rates actually came down to about 6.6%. However, they have been starting to climb back up. In fact, as of a couple days ago, Rocket Mortgage was quoting people for a 30-year mortgage at 7.13% again. So that is actually up pretty substantially from just where it was a few days ago. The big question that comes up for people is when rates come down this much, this fast, is, oh, maybe I should jump in and buy before the rates go back up again, which kind of creates more FOMO, guys. And I don't know if this is on purpose at this point or if it's just the way people are. But first of all, I don't think anybody should be making, hasty decisions over the fact that mortgage rates came down a little bit. Can it save you money? Yes, absolutely. No, without a doubt. And there's probably a few select people out there that are happy that they locked in that 6.5% or 6% mortgage rate now that people are already looking at 7% again. But it goes back to, why are people so concerned with the mortgage rate and not so much about the price, okay? Because you can never change the price you pay for the house. You can change the mortgage rate at some point down the road if you want to, but the price for the house is permanent until you sell it. And one thing that a lot of these stories keep telling people is, oh yeah, just go ahead and buy a house if you need to buy a house. And there's no actual need to buy a house. I mean, name one scenario where if someone needs to have a roof over their head, because that is the actual need, not buying the house, name a scenario where somebody needs to buy versus rent. I can't even think of one, and I've been in the real estate business for 15 years, guys. Because what people really need is a place to live. They don't need to own that place to live. And a lot of people will say, well, renting is a waste of money, you're paying off someone else's mortgage, etc., right? But who cares? Renting is temporary, it's not permanent, first of all. And the other part of it is that renting gives you a ton of flexibility, and at this very moment in time, you're saving a lot of money to become a renter, guys. Remember, if anybody saw my video from the other day, which I know a lot of you did, where I discussed different scenarios that recent home buyers have found themselves in, you might remember this couple that is paying like $5,500 for a mortgage, but they could rent a bigger and better house in an area that they prefer to live in for $2,000 a month less, guys. So think about that. Think about going from owning a house for $5,500 a month to renting one for $3,500 a month. If somebody is smart with that extra money, that extra $2,000 a month, that amounts to $24,000 a year. If saved or invested properly, that can grow. And I'm not sitting here telling you what you should invest that $2,000 extra per month in. That's your prerogative, guys. Like, anybody can choose what they want to make their own investments in. This is not an investment channel. I don't give you guys, stock market tips and buy this and buy that. Okay, that's not what I do. What I do is I present the facts and leave it to you to make your own decision for your own life. And the fact of the matter is, if you're looking at a savings of $2,000 per month on your living expenses and actually increasing your quality of life, well then who wouldn't do that? To me, that sounds like a no-brainer, right? But yet we keep seeing these stories that are pushing fear, that are saying, oh my God, the rates dropped, you better jump in and buy a house. Guys, why? Why should you jump in and buy a house because the rates went down? Because now you can save $150 a month on your mortgage payment? So what? Especially when you could save $500, $600, $800 a month renting instead. To me, that just doesn't make any sense. It doesn't add up of why somebody would do that. You know what I mean? And one thing that we can learn from this recent spike in mortgage rates going back up, like look how fast it went down, but also look how fast it went back up. And guess what? The Fed did not raise interest rates, okay? The rates have been the same for months now. The Fed has not touched the rates, so why did the interest rates go back up? Well, it's all because it's tied to the 10-year Treasury, guys. The interest rates follow the 10-year Treasury, which in turn gets influenced by what the Fed does, but the 10-year Treasury is going to send mortgage rates in one direction or another. All of these stories are telling people, oh no, you should just jump into the market now because interest rates are unpredictable and this new lower rate is a blessing for everybody looking to buy right now, so you should take advantage of it. Well, we know that there's a strong chance, okay? We can't not say for sure, but there's a strong chance in 2024 the Fed is going to start cutting rates, at least maybe once or twice, you know, who knows how many times, but I think it's safe to say we'll see at least one rate cut in 2024, and if we don't, it's because they feel like inflation is not coming down to the level that they want to see it at, which means the rates will remain higher for longer, right? But let's assume we see a couple of rate cuts this year, and that happens, right? So that ultimately, what it does is it makes affording your home more affordable, right? It's going to lower your mortgage payment, assuming prices don't go up, and in many areas prices are not going up anymore. I know there are some, you don't have to tell me, I know that. But in the vast majority of areas, prices are not going up anymore, guys. So prices are likely to remain flat throughout 2024 in most areas, and if rates do come down a little bit, that's going to save you money. However, there is something to be said about if you find the right house, you know, you're going to want to go ahead and buy it regardless of what the rate is, especially if it's difficult to find that perfect house. If you're somebody that's been looking for a long time and you haven't been able to find the house that you wanted, the house of your dreams, and it finally comes up and you can afford the house, you know, in that situation, you probably are not going to be concerned about what the mortgage rate is, and I don't blame you as long as you can afford it. But I guess the bottom line is here is everything that we see, all of these stories, right, they're all designed to do one thing. They're designed to make you scared that if you don't buy right now, you will not be able to. And already how things are starting off this year is proof that that's not true, guys, because rates came down. Buyers did not rush back into the market like Barbara Corcoran says was going to happen. In fact, mortgage applications continued to go down during the time when rates went down, and now they're already back up beyond 7% again for most people. So in effect, you could say unless you capitalize on those 2-3 weeks right there when rates were below 7%, nothing has really changed. And that's something I want to just warn people against because, you know, it's very easy today to get caught up in what we're seeing on the news and maybe other YouTube channels, especially real estate agents that are telling everybody that, you know, the best time to buy was 30 years ago, the second best time to buy is right now. That's a bunch of BS, guys, because I know that nobody can time the market 100% perfectly. You just can't. You know, it's always hindsight is 20/20, but you can do your best, right? You can spot trends. You can notice when prices are coming down or going up, and the same goes for rates. And is it becoming more affordable or less affordable to buy? And right now, it's actually becoming a little more affordable to buy, and it may be in your best interest to wait a little bit longer to increase that affordability. And the other thing is, guys, because nobody knows what's going to happen, you're seeing people right now that are looking at selling homes for a loss if they bought recently and need to sell for whatever reason. You could be next if you listen to this type of advice and just say, oh yeah, I'm gonna jump in and buy just because mortgage rates are lower now. That can be a slippery slope, especially if prices start coming down substantially in the next couple of years. And if you don't believe me that it's getting more affordable, well, Redfin is backing me up here, okay? Because Redfin just came out with a report saying that the average mortgage payment is down 14% from where it was just in October, guys. So that was only 2.5 months ago, roughly, and mortgage payments are already 14% cheaper, okay? My channel's my name. It's called Michael Bordenero. It's a real estate channel. Oh. Look it up. All right. Thanks, guys. Just saw some kids back there that subscribe to the channel. Gonna learn about real estate. And you know what that is? That's a $372 per month decrease in just 2.5 months, guys. So once again, people who bought into the FOMO of, oh no, you have to buy now or you're never gonna be able to afford it. This is proof right here, even according to Redfin, that all of that was BS, okay? Because housing can get more affordable, and it is actively getting more affordable right now. It still might be unaffordable for you, but for other people it's not. And you know what else is changing right now according to Redfin? Inventory, guys. New listings right now are up 10% year over year. Oh, that's another thing that's changing that they said was not going to change. Oh, we're never going to see home prices come down because we have low inventory. Well, low inventory is getting back to more normal inventory little by little. As we can see, new listings coming up and less places getting sold. We have new listings up 10% year over year. We have affordability increased by 13% in just a few months. This is not even a year over year figure. And during the same time frame, we have pending sales down 3% year over year, guys. So clearly the market has come to a standstill, and anybody who waited from 2023 to say 2024 to buy a home is going to be in a more favorable position. And I can't say for sure, but I anticipate that's going to continue to be the case moving into the next few years. You know, anybody who didn't buy in 2024 probably going to get a better deal in 2025. Same thing for 2026. Beyond that, I don't know. We'll see. The point is recognizing these cycles in the housing market and how making hasty decisions can really screw you over because you're making a decision based out of fear, not out of reality, facts, and data. Now, if we look at what's happening in the UK right now, this could be an indicator of what could be coming here to the US, guys. And you know, one of the problems with people jumping into the markets and not really looking at the data, not paying attention to where the future of things might be going can be a huge mistake, right? But also, it's important to look at other successful and developed nations to see what's going on with them. And one thing that's happening right now is the amount of people in the UK who are making cash withdrawals from ATMs is absolutely skyrocketing right now. In 2023, people in England made $31.4 million in cash withdrawals, with the average amount that's taken out about 105 quid each transaction. And the reason for this is economists are saying that a surge in the living costs over the past 2 years have triggered a change in people's preference towards favoring cash usage over digital bank accounts to keep track of their spending and to oversee their bills, because obviously when the cash is gone, you don't have any money. When you're just spending everything on credit and digitally on the bank, it's easy to lose track of how much money you actually have spent, right? Now, during the pandemic, these cash withdrawal amounts were lower, but now has seen a massive resurgence due to the fact that people are trying to cut back on their budgets. People are trying to figure out ways to mitigate their spending, and this is one of them right now. And so over in England, they've seen a lot of bank branches closing down as more people move towards, online banking and not really going into the bank for their banking needs. Well, what they have found is that there's still a massive amount of people out there that rely on cash to pay their bills and to just buy regular items. Many of them are older people that don't like to do online banking and go through all that stuff, and also lower income people that don't have as much access to credit and banking. They're the ones that rely on this, which is the same here in the US. And it turns out people don't just take cash out of these machines, they also use it to deposit cash, and they use it to pay bills. Clearly, cash has a much stronger presence in our society than people want to admit right now, since there's all this talk of the CBDC and wanting to eliminate cash altogether, things like that. Well, this is a trend right now that is kind of pushing in the opposite direction and may make it so something like that doesn't happen. Now, here's what they found out in areas where they closed down different bank branches, okay? Whenever there was just one bank branch left in the area, that they saw the average usage for the ATMs at the last remaining bank rise 55% when they closed surrounding branches. So this is a clear indicator that a lot of people still need and want to have access to cash, and when banks are actively trying to take that away, that's a problem. I'm not sure where I heard this saying from before, but I once heard a saying that look for tall grass and then you will find the good deals in real estate. And this house is the perfect example of it, because let me tell you why. I saw this notice on the door. I thought it was foreclosure or construction. Well, let's take a closer look. Actually, it's because of the tall grass. They have this violation here. They have 15 days to cure this violation. Otherwise, the city's going to charge them $1,275 to come in here and clean up this yard and cut the grass here if they don't do it, guys. This is like a code violation. Probably one of the neighbors complained because no one's maintaining this house. And on top of that, they have a for sale sign in the yard, and the realtor's last name is the same last name as the owner of the house, so they must be related, but the house is not listed on the MLS. So technically, that's also a violation of the MLS. They have the house listed with a real estate agency with a sign in the yard, but the house is not listed on the MLS. Property tax bill here is also a whopping $31,000 a year for yet another empty Miami Beach house. They even had one branch over there that saw a 154% jump in cash usage just in 2023. They had another branch where the cash amount went up by 144%, guys. So clearly, people are not done with using cash. And for everybody who says that we're moving to a CBDC sooner than later, it looks like that may not be true. It doesn't mean that we're never going to move towards it. I'm not saying that that's impossible or it's never going to happen. But what I am saying is it looks like due to the strong demand of people using this, that it's probably not going to go away anytime soon. But the other thing to look at with it is this is what people are resorting to right now in order to basically pay the bills, guys. People are looking at how can I cut back to the point where I don't have to worry about going into debt anymore. And I don't know if the same thing is happening here in the US, but I'd be willing to bet that maybe it is. And speaking of people paying bills and going into debt, what about bankruptcy, guys? I saw a story from a bankruptcy attorney talking about 3 things that you should never do in order to avoid going into bankruptcy. And this is probably a hot topic right now, since more and more people, and companies for that matter, have been filing for bankruptcy because things are not nearly as rosy as people think. So Adrienne Hines, she is a bankruptcy lawyer. She also has a TikTok channel. And the first thing that she says that she would never do to avoid a bankruptcy is never co-sign on debt for anybody for anything, guys. That means no co-signing on a car for your child, no co-signing on buying the house for your kids or anything like that, because this can easily drag you down financially to the point that you can be driven into bankruptcy. And here's one that I never really thought about before, that I would never think that this is something that people should avoid doing, but she says is never to borrow money from your primary bank. So say you have your main bank is Bank of America or TD Bank or whatever, they say you should never try to get a loan from that bank, because she says the banks will use this against you to lock you out or freeze your account. And they say that if your personal debt exceeds what you would get in a tax refund, that you would be better off taking the tax refund, file for bankruptcy, and get rid of all of your debt. And she says the reason for this is because the refunds that you get for taxes you paid on income before filing for bankruptcy become part of your bankruptcy estate. So if you receive the refund and spend it on your expenses before filing, it won't actually become part of the bankruptcy estate. So it sounds more like a loophole than anything else, right? Another thing that I was surprised to hear when I read this is that there's a big misconception that if you file for bankruptcy that it will ruin your life financially, which is not actually true. But even though bankruptcy might not ruin you financially, it is going to set you back financially, that is for sure. Another thing that she says to do to avoid bankruptcy is to never ignore debt. And the biggest chunk of the population who's doing this right now is, guess who? Student loan borrowers. Student loan borrowers right now are actively ignoring debt, thinking that somehow they're going to get that debt forgiven if they don't pay. but that's already been proven to not be true. And in fact, if you want to have any shot of getting debt forgiveness on a student loan, then you have to be making payments, guys, because if you don't, you forfeit your opportunity to get those debt payments forgiven into the future. And not only does ignoring the debt eliminate your chances of getting forgiven into the future, but it also makes it so that you're accumulating more interest and are going to owe more debt in the long run. And it means you're going to have eventual credit consequences from this because you haven't been paying. So even though you have that first year of leeway not to pay, that's going to change, guys. After the first year is up, that's going to start getting docked against your credit because you're not paying for these student loans. And then another bankruptcy attorney that they talked to in this story had another piece of advice for people that want to avoid bankruptcy is that never get divorced. And you know the easiest way to make sure you never get divorced is to never get married. This is probably the most destructive financial decision anybody could make. Divorce leads to more bankruptcies, and bankruptcies lead to more divorces than anything else. But it's not just your relationship with your significant other that can wreak financial havoc. Our perspective on employment also carries a strong impact. Because basically most people just work one job, right? And they have one source of income, and if for some reason that gets taken away from them, all of a sudden you have no income and you can't pay your bills, which can easily drive you into bankruptcy. This bankruptcy lawyer says staking your entire financial future on the whims of a faceless, potentially heartless corporate employer is nuts. He says that every American should start a side hustle that they can grow into a full-fledged business. Now, this is a little bit unrealistic for a couple reasons. Just because, one, guys, a lot of people don't want to have their own business. They like working a regular job, they like working the 9 to 5. They don't want to have the extra responsibility of having their own business. But also, let's face it, a lot of people also don't have the ambition to work beyond what they're already doing, right? A lot of people just want to go to work, put in their hours, come home, crack open a beer and hit the couch, right? So people like that are never going to start their own business or have a side hustle going. But if you want to have a more stable financial future, I actually agree with this lawyer a lot that you should have at least another source of income, guys. Like, say your job pays you $3,000 a month. If you can get some sort of side hustle going, at least where you're making 10, 20% of that amount each month, you're making an extra $300, $500, $600 a month doing something on the side, that can change your life, guys, and it can provide massive amounts of financial stability into the future. In fact, that's what I did when I was still working real estate. Because I did not want to be a real estate agent anymore, I decided I need to find a way to make money online. And little by little, I started making money online to the point where I didn't have to work in real estate anymore. Now it's my job, you know, now I can work online full time. But it took a tremendous amount of effort, and it was my goal from the beginning to make that transition. So everybody might not have the goal of making your side hustle your business one day, and you don't have to. But the point of the exercise is just to have an extra source of income just in case, guys, because you never know when you could get fired, especially since we could be moving into a recession at some point after the Fed starts cutting rates, and you could be the one on the chopping block. But if you have a side hustle, if you have some extra money coming in, you might be able to weather that downturn better than the average Joe. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I will see you in the next one.